Right, so let's explain why I took this trade. It was a short on pound dollar, targeting this low right here. So to begin with, let's go on the pound dollar. Let's remove everything and start from scratch. So if you look at the weekly chart, let's start previous week. So this is what it was looking like Sunday night before Monday candle even opened. We have this dealing range on the weekly time frame, and we're now retracing up into this dealing range, right? We'll start from the basics. So you have your high to your low of your dealing range, and you have discount prices. So anything up here is discount to go short. Plus, if you look here, we have a weekly imbalance. It's small, but it still is an imbalance, right? And that's our key level, right? So what we'll do to mark our key level is simply align, right? So we'll mark that as our key level. Okay, and then we have the previous week. So we mark out our previous week that we're expecting to get turtle souped, all right? Now, if you look at the 4 hour time frame, you can see that the range candle that we selected is literally doing a range. So it's chopping up and down, down, up and down, up and down, up and down. Not really, it's not trending. If we were trending, it would look like this. See, trend, chop, trend, chop, trend, and then right here is just chop, 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 chop. So nothing is happening in here, right? It's just a whole lot of choppy price ranging. It's literally a range. And then we have the daily time frame, right? So we have Monday, right? This is what happened Monday. So the weekly candle opened up, right? The weekly candle opened here. So you want to pay attention to the weekly open, high, low, and close. If we're expecting a down close candle, right? We're expecting this week, current week, to go down. So what are we expecting? We're expecting the candle to open, make a high, make a low, and then close. That's open, high, low, close. That's what a bearish candle looks like. So you break this down into the daily candles, right? So candle one of the week is Monday. And Monday opened here. See the weekly open, went higher, touched the key level, and closed back below the previous day's range. So that is a turtle soup candle. And if you go to the 4 hour, it's fractal. So the same situation is happening here, right? The weekly candle opens, creates a high at the key level, and you can use the 4 hour chart to see that as well. Range candle, right? So we can go into this. We have a range candle. All right, I don't want to get too confusing here for some people, but you have the range candle, turtle soup into the key level right there, close back inside the range. So even just based on this 4 hour chart, it's confirming that we have a bearish bias and we're now targeting this low. So Monday, we don't take a trade, and Tuesday plays out like this, right? Large downswing going towards this low, and then we reject, okay? So now we're playing inside of this dealing range, right? So let's recap a little bit so we see where we're at. Range candle, new candle open. It goes open, high, and now we're going to create the low and the close. So it's the same thing as the picture that I made, right? Open, high, and now we're creating the low and the close. So this right here is this right here. So now we're looking for entries to target this low. So now we have another dealing range from this high to this low. We have a discounted price. My entry was at 4 o'clock, which is kind of, it's a strange time. But if you look at the 4 hour, this was the candle that I was using. Um, EU is a little bit clearer, but for the sake of just understanding what's going on here, this is what's gonna happen, right? This is what's going on. So I took the trade here. I went short. Where is the short position? Why does it look like that? So I went short at 35.20, right? Originally my stop loss was like way up here, and we're targeting this low right there, which is the low of the week or low of previous week. So that was the entry, and price went up a little bit higher, creating the next day. And then we're crashing lower towards the target. So, I mean, that's a pretty basic premise of what's happening here. The main things we used, right? We'll make a label for it. So we had weekly dealing range, right? Then we had a previous week is ranging, right? And then before anything, we're expecting the next week or the current week to be bearish. So we're expecting an open, high, low, and close. Then we let the manipulation happen and find our trade within, if that makes sense. Um, Also, there was SMT between the euro dollar and the pound dollar. Just to put this into the video for future reference, you can see this high right here. See how it's highlighting both of them. It failed to make that high on euro, but it made the high on pound dollar. So there's a crack in correlation at a key time being Monday during manipulation into the key level. You can see euro dollar already completed it. But it's early in the week, so we will let this trade continue. And that is that. I don't think there's anything else. I just want to keep it super simple. There's other little nuances that I could explain, but as a basic premise to why I took the trade, I think it's good enough. I think it's good enough.